Hey guys, in this video I'm going to go through the pros and cons of investing in real estate versus investing in stocks. I know a lot of you guys have asked me about this topic, so I wanted to make a video on it just to explain a bit more to you about which one's a better investment or not, and also the pros and cons of each of these investments. I also know I myself struggle with this topic. I was also a bit confused about which avenue I wanted to go down. Should I invest in real estate? Should I invest in shares? So I hope this video does answer a couple of your questions and helps you out. So if you do enjoy videos like this, please make sure you give this video a like. It really does help out my channel and helps me understand what you guys like. And if you are new to the channel, please consider subscribing. I do produce 2 new videos every single week about how to make money, how to save money, and how to set yourself up for financial freedom. And make sure that you do stay till the end of the video because I've left the best part until last. This is the part where I go into detail about which one is a better investment and can give you a better return on investment in the long term. So let's just say you have $120,000 to invest. Will you get more money back on average by investing in real estate or investing in shares? So it took a while for me to work out these numbers, and I'm not the best at maths, so I really do hope that I got these numbers right. But honestly, the results kind of did shock me myself. So I really am looking forward to hearing your thoughts on it and seeing if you agree with me or not. To be honest, it's actually changed my point of view on where I want to invest in the future completely. So I highly do recommend that you stay until the end. So first cab off the rank is real estate. Real estate is a great form of investment because it is quite stable, and I believe that if you can really look around and find a really great deal on a property, you can make some really good money on it. The typical increase in value you can expect from real estate is 7% per year. So here are the pros and cons of investing in real estate. The first one is it's really stable. Everybody needs somewhere to live, so you can only expect your investment to go up with time, especially if it's a landed property. Number 2, there are tax benefits you can take advantage of when it comes to real estate investing in Australia. For example, negative gearing, so that's when your rental income isn't covering the mortgage of your property, you can claim the difference in your tax. And thirdly, you can be really clever with it and get a really great deal on your property, especially if you know what you're doing. When I first bought my home last year with my partner, we got a really good deal on it. And another apartment which sold in the same building, which had 1 less bedroom, actually sold for $50,000 more. So I believe that if you are really good at negotiating and you do know what you're doing, you can get a really great deal on your property and end up making a really good return on investment later in the future. So the first con is that real estate is really expensive. It might not be something that you can immediately attain straight away. The median property price in Australia goes from $400,000 to $800,000 depending on where you live. So you would need a pretty big deposit in order to get into the property market. With the new government legislation, you can have a 5% deposit on your property. However, when you do have a smaller investment than 20%, you do have to pay lender's mortgage insurance, which can make the repayments more expensive on the lifetime of your loan. Number 2, it can be really time consuming to find a place that you like. I remember when I was looking for my first home last year, it took months and many weekends looking at open houses in order to find one that we actually liked. So if you are looking to invest in real estate, please be wary that it does take a couple of months and a lot of research in order to find a really good place. And number 3 is it's not very liquid. So meaning if you want to take your money out of your property, it can take months to sell. So selling real estate, I imagine to be almost as hard as buying real estate. You can't really sell it straight away. You do need to wait for a couple of months until you find a buyer. It's just a bit more of a lengthy process. And here are some other things to consider if you are interested in buying real estate. These are some things that I had no idea I needed to know until I started looking for my first home. So I hope these do help you out as well. The first one is the interest rate that you have on your loan. loan can be a huge cost saver, especially when you look at it from the lifetime of your loan. So I think that it's really important that when you are getting into the property market, try and look for the best interest rate that you can. I was initially on a 3.5% variable interest rate and it dropped to a 2.72% interest rate. And when you look at that on the lifetime of your loan and you just compare the 3.5% to the 2.72%, that's actually a $60,000 difference. So I believe that looking around for a really good interest rate is important. The second one is, when I first bought my home, I wasn't sure if I should start making extra repayments to my mortgage or if I just should make the minimum repayments. And what I ended up deciding to do was just make the minimum repayments. This is because the interest rate on my loan is only 2.72%, whereas my investments in shares are getting about 7% return on investment. So my money is better spent with my investments. If the interest rate was higher than 7%, I would put more money into repaying back my mortgage quicker. And the third one is to be mindful of when you are buying your home. So I had no idea until I started looking for a home that there was a thing called a buyer's market and a seller's market. Thankfully, we were looking around the time that it was a buyer's market. There were a lot less buyers in the market than there were sellers. So this enabled us to have a competitive advantage over other home buyers in the market because there were just less of them. During this period, when it is a buyer's market, there are a lot less likely to be auctions, which is really good because auctions can drive up the price of a property and can be quite stressful, especially if you're quite new to real estate. So that's also something to keep in mind when you are looking for a place. So let's get into the pros and cons of investing in shares. The first pro is that you can get started in investing in shares with as little as $500. And the second point is, if you are a bit younger and you are willing to take on a little bit more risk in the investments that you buy, the returns can be a lot bigger. Another pro is shares are quite liquid. So when you do want to sell your shares, you can get your money back pretty quickly within a few hours or a few days. And this is much easier than buying or selling property. And the final reason is, if you are a really good investor and you really do know what you're doing, it can be really lucrative because businesses can grow exponentially. So if you are really good at finding businesses which have really high growth potential, you can make quite a bit of money from it. The cons about investing in shares is it can be a slightly riskier investment, especially if you are investing in individual stocks and businesses. And the second con is, if you are an inexperienced investor, there is the potential to lose quite a bit of money by investing in shares. With property, I think it's a lot harder to make these kinds of mistakes and really lose all of your money because property just tends to appreciate in value over the years, whereas shares can lose a lot of money really quickly if you're not careful. So now into my favorite part, which is the comparison of which one's a better investment, real estate or shares. And before I get into this, I did want to note that I'm not a mathematician by any means, but I really did try and research this topic as much as possible and make these numbers as accurate as possible so it can be helpful for you. And I'm also pretty shocked at the results myself. I didn't think that there would be such a big difference, and I'm really excited to share these results with you. So now we are going to compare two people which have $120,000 to invest. Person A invests in real estate and person B invests in shares. Which one will have a higher return on investment after 30 years? Today, I will answer this question. So if you buy a property worth $500,000 and your property increases by 7% each year, after 30 years, that property will be worth $3,800,000. So let's just say you put $100,000 in as the deposit for the property. You borrow $400,000 to buy your $500,000 property, and the interest rate is 3.09% because you're an investor. You have monthly repayments over a 30-year loan. Your monthly repayments will be $1,000 $716 per month for 30 years. So in total, after 30 years, you will pay $617,000 on the $400,000 loan. And there are also some fees which you should keep in mind when you are investing in real estate. For example, stamp duty is $17,990 on a $500,000 property. Stamp duty is something you don't have to pay if you are a first home buyer. However, if this is your second property, then you will have to pay this stamp duty tax when you do purchase your property. The second thing is a solicitor, which would generally cost $2,000. Strata, if you are buying an apartment, which I think you would be for $500,000. So I've estimated the strata fees at $96,000, and also the council fees, which would cost $42,000. There is also income that you can make from the property. So I estimated this income of $450 per week, which goes up by 2% each year with inflation. After 30 years, this would equal $949,000 in rental income. And also minus the 20%, which a property manager will charge you in order to ensure that your tenants pay their rent on time. This would cost $189,000. So the total rental income minus the extra fees would be $759,000. So if you add all of the income minus all of the liabilities and the fees, you end up with $4.4 million. Now let's compare shares. So let's just say you had $120,000. You don't have to pay the extra fees like you do with property, which you have to pay for the solicitor and the stamp duty. So you've saved $20,000, which you can invest. And I've put the same amount of money, which I would have spent in my mortgage repayments, into the share market each month. This is how much you could make if you are a passive investor and invest in things like ETFs, which generally give a 7% return on investment per year. The return is about $1 million less than investing in real estate. So why does real estate give you a better return on investment? Honestly, this kind of did shock me at first. I've always been someone who really believes in investing in shares. However, after doing these numbers myself, I think it actually does make sense for me now to look more into real estate investing. The reason why the returns were better with real estate was you're technically investing $500,000, not $120,000. So that's why the investment is better over the long term than investing in shares. In conclusion, I believe that investing in shares and investing in real estate are both really good forms of investment, and both can give you even better returns than the 7% average investment that I put in this example. The reason why I put 7% is because that's the average return on investment from the market, and also the average return on investment from the property market as well. So it really all comes down to what kind of investment you prefer. If you are really good at finding great deals on property and you're really interested in learning more about it, you could probably get even better returns than 7%, and you could even get 10% returns per year, which would make your return on investment even bigger. And the same goes for the stock market as well. If you're really good at investing in shares, you can absolutely make even better returns than 7% per year. In conclusion, I think that it is really important that you do your own research and have a think about which one you would rather invest in, investing in real estate or investing in shares. Which one do you prefer? Let me know in the comments. I read every single one of your comments and I would love to know. Thank you so much for watching this video. I hope you enjoyed it and I hope you found it useful. If you did enjoy this video, please give this video a like and please subscribe to my channel if you do want to see more. I produce 2 new videos every single week about how to make money, how to save money, and how to set yourself up for financial freedom. See ya!